I would urge people who are attracted to the uranium juniors to pay attention to that VIX chart. We are in a nobody's afraid of anything period.
Yeah.
And if that VIX number starts to go up, if some fear returns to the market, when fear comes into the market, tertiary assets fall the first and they fall the fastest.
Yeah.
And there's no asset in the world more tertiary than a non-revenue generating junior exploration stock. So if you aren't prepared to trade uranium for the long term based on fundamentals, you need to be very afraid of this VIX chart.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here with our mentor in commodities, Rick Rule. Rick, thank you for coming back on the show.
Pleasure to be with you. Thank you.
Yes, sir. Thank you. Do you have any opening thoughts, any macro thoughts on the world economy? How would you like to lead off?
Well, we sort of stumble along. I'm in this odd position of being afraid of our collective stupidity, while always being in awe and wonder at our individual tenacity and creativity. I'm one of those who sort of subscribes to the Robert Friedland dictum. The situation is hopeless, but for you, it need not be serious. Meaning that the world has as much opportunity as it's ever had, but you need to pay real attention. You need to work, you need to study, you need to save. The idea that over time you can rely on the Commonwealth for your well-being is, I think, very dangerous. It's a circumstance that's been drummed into people's heads in the period, particularly 1982 to 2022, by a 40-year epoch that was probably the most forgiving investment climate in the history of humankind. And I'm not saying that the world's going to hell in a handbasket. I'm just saying it's going to be more challenging in the future than it has been in the past, Steve. In terms of the beat I cover, the natural resource business, there are some signs of overheating. It's interesting that the very, very, very high quality junior deals still seem to be rationally priced, but there is a lot of froth. In fact, frankly, a lot of stupidity around the sort of theme juniors. And people need to be cautious about that. This is self-serving, of course, but people need to access the free lessons at the Rule Classroom so that they're less likely to be taken advantage of by the reams of online hype that are out there. Every time I post something on X, which is, as you know, Steve, is not infrequent, there are 2 or 3 tag-along posters who are obviously fraud, who are touting what I would suspect are worthless crypto products or worthless penny stocks. That sort of trash also follows me at YouTube. And I suspect they're doing that because there are people who read my posts who are stupid enough to listen to them. That's a market, that's an indication, pardon me, of an extremely forgiving, extremely stupid market. And I hope, in terms of my general rant, that this is a caution for people, not to not be in the market, but rather to do the work. Those people who follow the dictum, got a hunch, bet a bunch, are going to lose a bunch of money, Steve, and some of them are pretty nice folks, so I hope it doesn't happen to them.
Okay. You're afraid of our collective stupidity, but you have faith in the individual. So work, study, and save. But you do see some signs of the market possibly overheating. I've been seeing a little bit of that on the charts, and if I let me share my screen here real quick, and if I go to, okay, so this is the VIX, the volatility index. Maybe give give everyone a quick 101 on what this is.
Well, it's a volatility index. It measures market volatility, and volatility is often a symptom of fear. And if you look at where this chart is today, uh, fear looks like it has the electrocardiogram of a dead person. Um, I frankly like the backside of this trade. I don't very often trade indexes, but buying a little bit of VIX here might be a good idea. I've used the VIX for years because one of the things I dearly love to sell is one of the things I dearly love to trade are out of the money puts and calls on positions that I have. I love to establish a position in something like Agnico Eagle or Wheaton Precious or ExxonMobil, and then sell above market calls and below market puts, usually fairly short dated. If I can sell the volatility and keep the stock, the idea that the market pays me to buy low and sell high, which is something that I ought otherwise to do for free, is something that attracts me. But the problem with that strategy with a very low VIX is that people don't pay you for volatility.
Yeah, yeah.
I sell something, I prefer to get paid for it. So this chart is both a punishment and a puzzlement to me.
Okay, yeah, so basically when we see spikes like this,
Yep,
okay, this was Liberation Day right here.
yep,
That's where as you put it, like kind of a dying heartbeat right here, right?
yep,
This is kind of where I get excited because I feel like one of these is coming, you know?
yep,
Um, and if I overlay this here with the S&P 500, so the S&P 500
sure,
is in yellow, and
yep,
we can see as the S&P goes down, then the VIX goes up. So this is kind of a contrarian, or what do you call it, a reverse indicator, or it's kind of an opposite, right? Inversely
yep,
correlated.
yep.
So anyhow,
And I don't want anybody to think that I'm passing judgment on the valuations in the S&P 500. I'm not. That isn't something I do. I'm not a positive commenter to that or a negative commenter to that. I would simply say that we would appear to be existing in a market where there's no fear. And I suspect that there ought always to be fear.
yeah, yeah, okay, okay. And you alluded to the Rule Classroom. I'm really excited. Let's see, we're recording this on Tuesday. It'll go live on Wednesday. We're going to have Joe Mazumdar, our resident geologist, is going to be putting on a class at 4 p.m. Pacific time in the Rule Classroom Plus. You and I have a question and answer coming up this Thursday at 12:30 Pacific time, where we take student questions for an hour. And then we're going to be doing a discussion between you and Joel Littman next month, September 23rd, where I'm going to be the moderator. Go ahead and tell us about that.
I really look forward to that. I think it was incorrectly termed a debate. A debate suggests that I know enough about Joel's topics to debate him. This is more of a discussion. Joel is somebody who I've had at our conference for 3 years running now, and he always does very well in the attendee polls. Joel is important to have there because too often the conference is what you might describe as echoes of doom. And Joel uses his fairly formidable accounting skills in particular to suggest that the fears of many of the gold bugs, myself included, are misplaced. So, what I'm hoping to do, because I don't like being afraid, is I'd like to present some of my thesis around the arithmetic of America and have Joel, a younger man, explain to me why in my dotage I shouldn't be captured by fear. Uh, there are a lot of the positive commenters in the world who comment simply based on the epoch 1982 to 2022 and say you should buy dips because buying dips has mattered. Joel's more sophisticated than that. He, I think, does a better job than most looking at the broad economy and extrapolating real data into valuations as opposed to narratives. So I look forward to this. I would say he's one of my He's one of my favorite bulls. Warren Buffett probably being my all-time favorite bull.
Yeah, the first time I saw him was his presentation at the 2025 Rule Symposium. And he basically gave a case for how, you don't have to worry about the US government going bankrupt. And the room was just silent while he's talking,
Right.
because there's just been nothing but gold bulls talking for this whole time. And he's like, yeah, no, the S&P 500 should do great. And he's right. It did,
Yeah,
It,
well, I'm not going to take him on with regards to the S&P 500 because that's not what I do. I understand well conventional financial services, not fintech, but conventional financial services. I understand well natural resources. I look at the broad economy the way a banker would, which is to say, if I were lending money to this credit, would I be likely to get my money back? And maybe more importantly, if I do get my money back, what will my money buy? I take the point of view, not as an economist, but rather as a lender, that with on and off balance sheet liabilities of the US government, including entitlements, now handily exceeding $150 trillion, as against gross federal revenues of $5 trillion, that were I considering investing in a US long-term treasury, as a lender, I wouldn't do it. And I'll be interested in Joel's take because Joel will be he will be narrative free. He will be rhetoric free. He will be math long, which I look forward to.
Yeah, I look forward to it as well. That's going to be a lot of fun. I'm glad I'm a part of it. That'll be fun. Okay, and we had a recent Fed meeting, if you want to call it that. Jerome Powell got in front of the microphone, and he basically alluded in saying that they're going to be cutting rates. And if we go to our friends over here at the CME Fed Watch tool, we can see for their September 17th meeting, 87% of traders think that they're going to cut interest rates. And then if we go out a little bit further to the next meeting in October, only 6.8% of traders think that rates will still be where they are now, 4.25 to 4.5. What can we surmise from this? Are they just basically sacrificing the dollar? What's your take?
I think they are sacrificing the dollar. I think in terms of trading, and it may be built in. This has been one of the most widely telegraphed sacrifices in human history. But given the relative economic strength in the U.S., given the strength in the long bond market, given the strength in the equities market, given the strength in the employment markets, this is not the time when one needs to lower rates. Really, I think if we have a substantial rate cut, or if we have a series of rate cuts, that this will signal to savers and investors on a global basis that U.S. society doesn't care about the integrity of the U.S. dollar. And I don't know that it'll have an immediate impact because I think it's already had an impact. I think the price levels that you're seeing, indeed, the somnolescence of the VIX, speak to the fact that in the near term, the impact of the rate cut is probably already priced in the market. But I suspect that to the extent that U.S. society signals to savers around the world that they don't care anymore about the integrity of the dollar, that over time, this will not be good for U.S. dollar denominated fiat savings products, and conversely will be extremely good for gold. By the way, I can't resist this as an opportunity for a commercial. Battle Bank's transaction, the transaction which allows us to open our doors, was approved the other day. And I can't imagine a better time to be offering certificates of deposit in 20 currencies outside the US dollar, or to be allowing people to access credit in a collateral type, gold, silver, or platinum and palladium, that I think will do very well. I probably should build and maintain an altar to the Fed in terms of the absolutely sweet timing between what they're doing in a policy sense, which I suspect is very bad for the country, and what they're doing in a financial sense, which is extraordinarily good for Battle Bank. The idea that these two things are occurring concurrently is the sort of situation that happens all too seldom in one's life.
Well, congratulations. I know this has been a long road. Well done.
It has that, and we still need to open now, but the regulatory roadblocks are effectively behind us.
Right on. Okay, give us some of the selling points. So minimum deposit is 5K, if I remember correctly, right? You're going to have high yield savings. What go into some?
Yeah, I mean the product suite that's of interest to your audience, I suspect, is that rather than having 15 or 16 savings products, most of which are designed to hoodwink customers and not pay them interest, we'll have one high yield money market account, no fee, and we'll pay you interest on your checking balance. Our tagline, if you're interested in interest, check out Battle Bank. As I alluded to earlier, though, you don't have to bank just in US dollars. I think we're going into a period of currency turmoil, very much like the period in the early part of the decade of 2000 to 2010. The consequence of that is that Battle Bank will offer certificates of deposit federally insured in 20 currencies besides the US dollar, which I think will be very well received by the market. Our last bank, Everbank, did the same thing, and we ended up with $8 billion in non-US dollar denominated savings products, which I think will do well. Another thing, which I think your audience is going to love, Steve, is checkbook IRAs and checkbook 401ks. At most institutions, their retirement products, their IRAs and 401ks, are really designed as receptacles for annuities, mutual funds, managed accounts, stuff like that. The range of menu options is extremely limited. At Battle Bank, your retirement account owns an LLC, and that LLC can invest in any permissible business. You don't have to wait for the president's permission to invest in private credit strategies or private equity strategies. You can do it now. You can own a duplex. You can own a triplex. You can own a Subway franchise. You can invest in crypto. You can buy precious metals. At Battle Bank, your retirement account is just that. It's your retirement account. It's not a receptacle for Wall Street's mess. On the asset side of the business, what will be of most interest, I think, to this crowd is that we'll be the first bank in the United States to offer what are in effect margin accounts secured by physical gold, silver, and platinum and palladium. For whatever reason, our competitors don't seem to believe that gold, silver, or platinum or palladium are good collateral. I've been lending against them for 50 years. The truth is that they're liquid 24/7. They're superb collateral. And it's also an audience that I know well. Importantly, I think with Battle Bank, particularly for people who are considering investing in rather than just with Battle Bank, the fact that over 18,000 people have come to us pre-opening and said they'd like to do business with us, and the vast majority of them have become familiar enough with our products and services that they've specified in their communication what it is that they would like to do with us, says a lot about the impending success of Battle Bank. I think if I wanted to leave one message with your listeners, it would be that Battle Bank aspires to be a community bank, but where community is described more by philosophy and aspiration, a community of self-actualized people, not Wall Street slaves, rather than being defined by geography. This community is people that subscribe to independent newsletters, people genuinely who are interested in precious metals, People who are skeptical about Fed pronouncements. In other words, Steve, your audience.
Yeah. I've kind of gotten to the point where I'm entertaining the thought of that. Like in a checkbook IRA, you could you could buy a duplex, you could buy a rental property, right? How does that mechanically work as far as you have to buy it all with cash, right? And then
No, 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 no,
no?
no. No, you absolutely can in a checkbook IRA uh, take out a secured loan against real estate. Uh,
Oh,
no, I mean, one of the things that Battle Bank hopes to be able to do is for qualified borrowers provide first mortgage financing for duplexes and triplexes and small commercial real estate in IRAs and solo 401ks.
okay. Okay. So you could actually put 20% down. That cash comes
Correct.
from your IRA, and then have a note on that, pay the note, and the cash flow coming in goes right back into the IRA. Is that?
Yes, sir.
Huh. Okay. I was always under the impression you had to
Well,
buy
no,
the whole thing cash.
technically, your IRA owns 100% uh, of an instrument which allows you to do the investment. So the cash flows into that instrument, like an LLC. And so the cash technically flows into there, but the can flow out of there into your IRA because you own 100% of the instrument.
Okay. Okay. I like that. I like that a lot. Okay. I like real estate. It's my favorite asset class because people always need a place to live and they'll pay you to do so. Um, okay, I'm getting a little off topic here. Okay, gold. Let me share my screen here and let's go to the gold chart. Congratulations again on that. That's really exciting, Rick. I know that has been in the works forever, and it's finally
Bank's
happening.
damn near as old as me.
Good for you. That's got to be a real sense of accomplishment, and it's gonna be, you gotta be stoked. Okay, here's the gold chart. Now, as a chartist, I can't help but just see bullish consolidation here. It looks to me like gold is just kind of ready to break out up into the next level. But then when I go to the miners here, if I click over to GDX, or I could do it on GDXJ, these things really look like we're kind of getting long in the tooth here. Do you see something similar, or what are your thoughts on it? We're getting crowded here. You alluded to that in your intro.
Yeah, I mean, charts don't speak to me particularly.
Hmm.
I need to say that. Uh, the best of the rest trade, which is to say the big gold mining companies below Wheaton, Franco-Nevada, and Agnico Eagle, uh, seem to be benefiting with from a lot of cash inflows. In order for those equity prices to continue to march, the gold price absolutely positively has to hold. If you run a net present value discounting the free cash flows of the XAU at $3,400 gold, these things on a historical basis are not expensive. They're cheap. But I'll tell you what, if gold doesn't hold 3,400, if gold were to retrace back to 3,100, not only would that beat up sentiment, it would absolutely positively beat up margin. So people who are in the equity trade, people who are in the equity trade for 5 years are going to do great. People who are in the equity trade for 3 months, better hope that the gold trade holds together. Traders also who are holding gold in anticipation of the Fed announcement might want to pay attention to the fact that the market might already reflect in the near term the importance of the Fed announcement.
Okay. Okay. So you're saying the market generally might be overbought. If it starts to roll over, it could pull this down with it.
Now, I don't believe that to be true for Franco, Wheaton, and Agnico, despite the fact that Agnico has done very, very, very well. The margins that they're generating at these prices, and in particular with regards to Agnico, the growth prospects that they already have in place, the growth pipeline, suggests to me that those three are a world apart from the rest of the gold shares.
Okay. Okay. I recently sold out of every major except for Agnico. I sold Newmont and Barrick, and I put it into Equinox. And
Right.
at first that looked stupid, but now it's starting to look like it was a decent decision. We'll see.
Well, that marks you as a speculator, Steve. You're
Yeah.
you're betting on a new management team. You're betting on the turnaround at Hard Rock, and you're betting on the successful build at Maritime. I'm a decent size Equinox shareholder, so I wish you well. But understand, coming out of near-term cash flow for prospective cash flow brands you as what you are.
Guilty. Good luck to you too. I wish you the best. Okay, screaming higher. Oh, this was a question on okay, using PHYS as cash. So a vehicle like the Sprott Physical Gold Trust. Um, I've got some of that in the gold portfolio, and then I'm rounding here, but I think I've got about 20% cash. Maybe half of that is tied up in good till cancel limit orders on stocks that I hope get sold off. The other half, I got to thinking, and I'm like, maybe it's not such a bad idea to have that a little more tied up in a fund like PHYS. What are your thoughts on that?
With the caveat, I do regard my bullion and my bullion surrogates as cash, but I have an unusual degree of comfort with volatility. um, you, if you're somebody who, in particular, spends a lot of time on intraday charts, you probably need cash for your cash. If you are somebody like me who tends to maintain well more than 20% of his or her portfolio in liquid fashion, and thinks in 2 year and 3 year and 5 year timeframes, then absolutely something like PHYS works. It works better, by the way, than physical bullion because you can buy it and sell it with the click of a mouse. The spreads between the bid and the ask are infinitesimal, and you don't have to worry about storage and insurance. To get your cash, you click a mouse. You literally click a mouse. So if you're thinking about using gold as cash, gold as liquidity, think much more about the surrogates. I believe, now conflict of interest is involved here, I believe that the highest quality of all the surrogates is PHYS because it's not an ETF. Its assets don't pinch and swell every day. It doesn't have to sell gold. It doesn't have to buy gold. It doesn't have to accept, in fact, can't accept deposit receipts. So it is the most unencumbered form of liquidity that I know of in the physical space. It also trades like water. So you don't have to make an appointment to make a trade.
Yeah, yeah, I think there's enough volume there to even do market orders, which is really, really cool. Um, all right, macro thoughts on silver. What do you see in the works for silver?
Uh, Really unchanged, but for those of you who don't know what that means, who haven't heard our earlier discussions, in my experience, precious metals bull markets are led by gold. They're led by the fear buyer. When the momentum in the gold price uh, draws people first to equities, gold equities, uh, and in particular, when the generalist investor comes down into the precious metal space, leadership goes from gold to silver. I'm not convinced we're there yet. As I told you before, Steve, when it happens, you're not going to need me to tell you what happened. Moves in the silver market tend to be extremely dramatic, and tend uh, they tend to be less than the moves that one would expect in a basket of high quality silver stocks. The amount of silver available for good delivery relative even to the futures market that exists today is fairly infinitesimal. And the market cap, the consolidated market cap, pardon me, of the silver equities is even more constrained relative to the size of the potential buying pool. Um, of course, your listeners are going to want to know when this blessed event might occur, and I have no earthly idea. I don't know. What I do know is I've watched three prior silver bull markets in my lifetime. And the rewards that I've received, if you will, the rents I've received from being early have been incredible. From a financial point of view, looking backwards, it doesn't matter whether it happens 6 months from now or 30 months from now. If you think about your avoided cost being, the US 10-year Treasury rate, which is 4.5%. If you're talking about an asset class where the physical could triple, and where a basket of high quality equities could easily go sixfold. Let's say it's 2 years as opposed to 1 year. Let's burden it with a 9% cost of capital over 2 years as opposed to a 600% gain. You understand what I'm saying?
Yeah.
It's psychologically difficult for people to hold, particularly in volatile times, for extended periods of time, not understanding when their reward might occur. That's true. What I've learned is, in a financial sense, it doesn't matter.
Okay. Okay. All right. Just throw your hat in the ring and it'll pay off.
If
To
you
be patient.
if you believe, if you believe that we are in a precious metals bull market with legs, which I believe. Make no mistake, I believe that we are in an absolute dollar bear market, maybe not a relative dollar bear market, but an absolute dollar bear market. The countersign to that is that we are in a bull market. If you believe as I believe, and if you are speculatively inclined, if you're an investor, stick with gold. But if you're speculatively inclined, if your name is Steve Barton, as an example, then you want to allocate some to silver, and you want to allocate to silver before the rush.
Okay. Okay. Let's wrap up here with your thoughts on uranium. We've had, I believe it's a floor. Maybe I'm wrong. When we look here at the spot price of uranium, I'll share my screen here real quick. We had that awesome blow off top, which was just amazing. And anyways, now we've come back down. We got down into the low 60s, and it looks like we're kind of carving out a bottom here in the 70s. What are your thoughts on the spot and term price of uranium?
I have no idea with regards to the spot price. It really, again, is a function not of the politics of Japanese restarts, but the reality of Japanese restarts. The supply that you've seen in the market is Japanese inventory that's been leased as opposed to sold. They know they're going to burn it. They don't know when they're going to burn it. When that's used up, I suspect spot gets tighter. I would urge people who are attracted to the uranium juniors to pay attention to that VIX chart. We are in a nobody's afraid of anything period.
Yeah.
And if that VIX number starts to go up, if some fear returns to the market, when fear comes into the market, tertiary assets fall the first and they fall the fastest.
Yeah.
And there's no asset in the world more tertiary than a non-revenue generating junior exploration stock. So if you aren't prepared to trade uranium for the long term based on fundamentals, you need to be very afraid of this VIX chart.
Okay. Okay. I can't help but notice here, and like URNJ and URNM, they're starting to creep up, and I've been investing in this for, I don't know, three or 4 years or something, and it's pretty tightly correlated to the S&P 500. When if the S&P 500 has a bad week, usually uranium has a really bad week. So, okay.
Well, I think that's a really good point. I think particularly with the algos, you're dealing with risk on, risk off.
Yeah.
To me, it doesn't matter much because I don't trade it. Well, I do trade it, actually. If it seems to me like I've got too much too quick, for no reason I can think of other than experience, I sell some. And if the sector seems like sentiment is wildly overdone, I buy some, but that's as sophisticated as I get.
Okay. Okay. All righty. Thank you. I think I needed to hear that. Okay, Rick, we will put the links down below of the Rule Classroom and the Rule Classroom Plus. I look forward to being there with you on Thursday for our student Q&A. Any final thoughts?
I think that'll do it, with the exception of the fact that anybody out there who would like to get paid interest or is interested in interest, check out Battle Bank. We're about to be open for business, and we'd like to battle for your business.
Thanks for tuning in today with Rick Rule. If you enjoyed this conversation, we went even deeper in a special interview exclusively for premium Substack subscribers, where Rick reviewed some companies in our premium portfolio. If you want access to those sessions, plus weekly updates on the stocks I'm buying and selling with real-time trade alerts, head over to Substack and join us. The link is down below in the description, or go to stevebartonmoney.com and sign up there. And if you're already a premium subscriber, check your inbox. The next video with Rick is waiting for you. Thank you so much for your support. Have a wonderful rest of your day.